You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310 and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN E-Mini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 12th day of April, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. There will be days, of course, that you're out of the office or away from your desktop. Just point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live during this broadcast on our YouTube channel, which is youtube.com/CFRN CFRN. We also archive each and every daily broadcast on our YouTube channel. Currently, there are over 1,600 daily shows for your viewing pleasure. Let's open with a word of prayer. Oh, and by the way, while you're visiting the YouTube channel, be sure to click the subscribe button. That does two things. One, it helps more people find us. And number two, anytime that we go live, even if it's unscheduled, breaking news, that type of thing, as a subscriber, you'll be notified and you can tune in with the click of a mouse. So, with that, we'll open with a word of prayer. Heavenly Father, we thank you today for your blessings, for your mercy, for your grace. We know that you have entrusted us as stewards of your creation. We ask that you would guide our hearts and our minds as we make our decisions. We seek you first in all that we do together. We give you our business, our team, our members, and our followers. May we always be mindful of their service. We confess that we're really nothing without you, and it's in you where we put our trust and our faith completely. In Jesus' name we pray. Amen. Amen. Right. Happy Monday. Let me give you the numbers from around the world. These are the cash markets, or the indices as they're called. Starting here in the U.S., the Dow is down 43 points. NASDAQ is down 65. S&P 500 is down 5. The Russell 2000 down 12.5. In the commodity basket, crude oil up 42 cents, trading 59.74 last. Gold down $13, trading 17.3180 last. Silver down 51 cents, trading 24.81 last. A reminder on silver, a move in the price of silver of $1. If you're holding a large futures contract, that has a value of $5,000. So the fact that silver is down today, 51 cents, that's $2,500 per contract traded. In the Asian markets at the close, Nikkei dropped 229 points. Shanghai fell 37. The Hang Seng dropped 245. The Shanghai, that's a drop of a little over 1%. And for the Hang Seng, that's a drop of just shy of 1%. In the European markets at the close, FTSE down 26, DAX down 19, and the CAC down 7. This is the first time in a long time, but we have a red day in Asia. We've got a red day in the UK, and it's a big red Radio Monday here in the US of A. Now, if you hear background noise during today's broadcast, that sounds like construction, or sounds like men in the attic working on the air conditioning. Wow, you guessed it. That's exactly what's going on. However, we're going to just press on, because as they say, the show must go on.
The show must go on. Did you say your air conditioning is not working?
Well, yeah, one of them. There's two, and one's out, so the guys are up in the attic trying to fix it right now.
That's not good.
So, yeah, but anyway, I mean, it's not unbearably hot here yet. I think the high today, what is the high going to be today? It's starting to get to that time of year, though. And let's see, currently it's 77, which isn't bad.
No, that's
And
about what it is here, right?
high today is only going to be 90. So it's not a bad day for these guys to have to be up in the attic. Boy, does it get hot up there. When it's 110 outside, I think it's probably 140 inside the attic. So
Yeah. They're going to go up there in suits.
okay. Well, if you're ready, you can take it away.
Yeah. Okay. All right. I will do that. Here we go. All right.
Okay.
You guys
Got you locked and loaded.
Excellent. All right. Here we go. Put that over there. All right. Good afternoon, everyone. Today is Monday, the 12th day of April, 2021. If you've not taken a free trial with us and you want to take a free trial with us, go to the homepage at cfrn.net. Right here it says free 5-day trial, no credit card required. Click on that. It's going to bring you to this page, eminitrainingschool.com. On this page, all that we ask for is your name, excuse me, your name, your email, and your phone number. And you can tell us the biggest training challenge so we can tailor one-on-one training just for you. We really do that. Hit the send button, you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click the link, we don't know that you took the free trial. All right, the recaps. Where are we on this thing? Okay, if you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Okay, today, as I said, is the 12th day of April 2021. Today we made 16 ticks in crude, 29 ticks in gold, and 8 ticks on the ES. Put us at plus 550 on the morning session. Today took 6 minutes and 2 trades to get to the goal for the day. At that point, we're up $200 a contract, and we took a total of 18 trades this morning. On the month now, we're at $4,512. That's over 7 trading days, averaging $644 per contract per 2-hour trading day. Just go look at what we did last month. Last month, we averaged 922. This month is starting off a little slower than last month. Either way, we've made our goal for the day on 67 out of 68 days this year, and we are now at $57,215 a contract. That's over 68 trading days, averaging $841 per contract per 2-hour trading day. Okay, let's jump into what we did or didn't do. We'll start out with the ES. The ES was just kind of, it really didn't give a lot of opportunity today. It didn't. We took, let's do this right here. Our first trade on the ES, we were given areas where we thought it was going to go to, and it eventually got to them. But our first trade here on the ES, we picked up 4 ticks. Okay, then it moved down. It moved down pretty quickly, fairly quickly here. It moved down, but it didn't give us a trade setup until way down here. And on this trade setup, we ended up with a break even. It closed down below the MA1 right there, came back up, and took us out of break even. This trade right here didn't go anywhere. We're given areas where it should go to, which it eventually did, but it just took forever for it to happen. So it took a break even there, another 4 ticks there to get us to plus 8, another break even there. And that was all that we did. Now, during, or I guess at the end of the live session, I said during the break, it should probably get up to that level, and it did. And now it's peeling off that level, and it just doesn't have a trade setup for you. The ES just wasn't giving it up today. Crude oil is where we got our goal for the day. It wasn't our first trade of the day. It was our second trade of the day. But it was a big one. And then we gave it right back. It was this one right here. We got in here on the up close off the BBC. I think I got in a tick or 2 above that. And we picked up 20 ticks on the first trade. And I kept giving these areas as it was going. And there was one more area up above that it almost made it up to. Well, it did after it took me out here with plus 20. I think it was actually my area above. It was just a little higher, I think. Then it stopped me out, and it stopped me out again. And this one here, I shouldn't have stopped out on. This was my fault. I should have moved my stop to break even. But I think I was talking and I was doing something else. And it whipped way down and whipped right back up and took it all right back. Then we had a break even, a missed trade that would have been profitable, a break even, a missed trade. On this one, we picked up crude oil. Let's see, we're down to 4. And then we picked up 2 there to get us to plus 6. Then 10 there to get us to plus 16. We had a break even there, and that was going into trading for the morning session. Now, at the end of the session this morning, I said to look, I think this area right here is what I had said, look for it to get up to 60.06, and it did during the break, and it sold off of that, given a shorting opportunity there. And here, this would have been a break even. This probably would have been a break even too. And that was it. It really didn't give a ton of opportunity. All right, and gold. Let's go back to the beginning here on gold. Our first trade of the morning was right here on gold. We ended up with a break even on that. We missed that one, and we missed that one, and we missed that one. And then finally we got this one over here. We picked up 11 ticks on that. And then the next one was right over here. So it got really choppy in here for a little while, but managed to skip all that. And we got here, we picked up another 10 ticks here to put us at plus 21, then 5 there to put us at plus 26. A break even right here. Now, I didn't get filled on this first trade. Yeah, I guess this is the one that I didn't get filled on. There was one in here I didn't get filled on, I thought. Oh, it was right here. I didn't get filled on this trade right here. I mean, I did get filled on this. I ended up with a break even on that. And a break even on the next one, and a plus 3 on that one to put me at plus 29. There was a trade here that just kept going and going. I missed. Well, I tried to get filled, but I didn't get filled. Another one here. Again, I didn't get filled. And then during the break, there was what would have been a trend line trade right here, but a YVR trade right here. That worked out really well. And then that was really it for the gold. So we ended with plus 29 on the gold on the morning session. All right, so let's go back here and get this out. Again, if you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today is the 12th day of April, 2021. 16 ticks in crude, 29 ticks in gold, and 8 ticks on the ES. Put us at plus 550 on the morning session. Today, it took 6 minutes and 2 trades to get to the goal for the day. At that point, we're up $200 a contract, and it took a total of 18 trades this morning. If you've not taken a free trial with us and you want to, go to the homepage here at cfrn.net. If you scroll down to this green box right here, it says free 5-day trial, no credit card required. Click on that. It's going to bring you to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us your biggest training challenge, so we can tailor one-on-one training just for you. Okay. Once you do that, hit the send button. You'll be sent a confirmation link. You got to hit that confirmation link, or we don't know that you took the free trial. Okay. So make sure you hit that link. All right. That's it, guys. With that, we can pass it back out to Studio A in fabulous Phoenix, Arizona, looking South Mountain, America's largest city park. Dwayne, if you're ready to get back.
I'm ready.
Okay.
Okie doke. Recap of the recap.
Today it took 6 minutes and 2 trades to get to $200 per contract.
Now, it took 13 trades on Friday. What'd you do different today?
Nothing at all. Nothing at all.
Absolutely nothing.
The same exact thing for years. Over and over and over.
And that's the truth, guys. We've been doing the same thing for many, many years. We haven't changed a line of code in our indicators or rule to our strategy. It's not broke, don't fix it. Our strategy, unlike many other strategies which try to outsmart the market or outthink it or outrun it or outfox it or outdistance it, we don't. We don't. You wonder why so many methodologies and strategies work for a while and then they don't. And then maybe they do, and then maybe they don't. And that's because these strategies and methodologies are designed and created to try to do the unthinkable, the unknowable, and that's to know with certainty what's going to happen next. And mankind doesn't have that ability, not man nor his machines. Because back in Genesis, when God created Adam, he did not give Adam the ability to change the past or to know the future. And those two things are inextricably linked for eternity. Now, this industry, all the vendors that line the yellow brick road all the way to Wall Street, not our yellow brick road, but the one from the Oz, try to convince you that they know what's going to happen next. And that's why you've gone from one guru to the next, one trading room to the next. You've tried this methodology and that strategy. None of them ever live up to the promises, which is one of the reasons we don't make any promises. Our methodology and strategy is designed to mirror the movement of the market. Now, this will sound incredibly simplistic to those of you who have spent tens of thousands of dollars and Lord only knows how many years trying to learn how to trade. It's because you're attempting or you're believing that the sales pitch, the clever ad copy that says they do know with certainty what will happen next, you found out from experience, spending your time and your treasure, that it's just not true. So we don't insult your intelligence, but we just tell you the truth up front. We don't know what will happen next. No one does. However, our methodology and strategy, the way it's designed and created to simply mirror the movement of the market, well, in the simplest terms, if the market is moving higher, we want to be long. And if the market is dropping, we want to look for opportunities to be short. Now, again, I know that sounds very elementary to someone who's spent lots of time and treasure on gurus and systems and indicators and all of that. But it's the truth. And so what our strategy does that is unique from others is it helps you to see at a granular level what the market is doing. Price flows on a monthly chart the same way it flows on a 1-minute chart and every chart in between. That includes range charts and volume charts. Price will continue to move higher until it finds resistance. Once it finds resistance, it will turn around and go look for support. Once it finds support, it will go and look for resistance. And this repeats over and over, again and again. You can't escape it. You can't beat it. So, yeah, beat them, join them. So our goal is to simply do what the market does. Now, the indicators help you do that. We teach you how to read the chart, how to understand price flow. That helps. And the alerts that we send around the clock 24/7, those are predefined, pre-vetted windows of opportunity where you have an opportunity to practice what Michael teaches you every morning for 2 hours. Now, with lots of methodologies and strategies, things are always changing. There's new discoveries. There's always something else to buy. There's an add-on. There's an upsell, an upgrade. We don't have any of that. We have one thing, as you see on the screen up here. It's called the CFRN Passport. It is an all-access pass to everything we do, everything we've ever done, and anything we might do in the future. One money, one time, that's it. There's no weekly, no monthly, no annual, no recurring fees, no upsells, none of that. With the Passport, you have access to the room every morning with Michael. You have a live instructor. That's important. You can watch videos till the cows come home of other people trading, and you'll never learn how to trade doing that. Just like watching videos of somebody swim, even the best, like a Mark Spitz. Man, you could watch those videos every day for a year, but once you get in the pool, first thing you're going to do is sink. Unless you have floaties. And those will keep you buoyant as you learn how to stroke and kick, and pretty soon you're swimming. The only way to learn how to trade is by trading. You want to swim, you got to get in the pool. If you want to learn how to trade, you got to start trading. But the biggest mistake most new traders make is if they've put away $5 grand or $10 grand or whatever the number is for the purpose of trading, well, once they make the decision to become a trader and they fund their account, well, hey, let's go click the mouse and make money. Well, we do want you to start trading coming out of the gate, but not in your live account. You need to be in your demo account, in your simulator, until you learn the strategy. And our strategy is very simple. So if you can not overcomplicate it, not overthink it, it won't take you very long to be able to determine what the next high probability move is in any market, in any time frame. Everything that we teach you is fluid across all markets and all time frames. What Michael teaches you in the room in the morning, he uses a fast range chart, so he's able to show you lots of trade opportunities over and over again and again during a 2-hour period. We risk 8 ticks on every trade. Now, Michael is teaching you a very important concept, and that is you must always have a hard stop in place. If you don't have a hard stop, you're not really trading, you're just gambling, you're taking a shot, you're hoping. We should all have hope, but hope is not a good trading strategy. We use 8 ticks on every market, on every trade. Now, once you know them, once you begin to understand the methodology and the strategy, chances are you may gravitate to the larger time frame. For our alerts, the default time frame is a 30-minute chart. If Michael were using a 30-minute chart in the live trading room, there might be some days where you don't even have a valid setup, even across multiple markets. Or maybe on a busy day, you might have 1 or 2. So he's teaching you on the fast time frame so you understand the concept, you understand the process. But the alerts are based on a 30-minute chart, and each alert has time built in for you to get to your computer without tripping over your feet. I build in time to every alert so that you can get to your computer, read the alert, because your phone, tablet, or PC or Mac will make a telegram sound. When you hear that sound, that's not a call to go trade, it's a call to go look at the alert and to look at your chart. What we're trying to teach you is to see these windows of opportunity yourself. Eventually, you should be able to spot the window of opportunity, and you should reach a point where you don't need anyone ever again to tell you when to get in or when to get out, because you see it yourself with your own eyes, and whatever's happening on the chart, you understand exactly why. Remember, price flows on an S&P 1-minute chart the same way it flows on a crude oil monthly chart. And we're going to go to the charts now, and I'm going to show you exactly how that looks. Now, we are at all-time historic highs, and I keep saying that every day because, well, here's a new all-time historic high, and another, and another. Now, on this day, we had a intraday higher high, but not a closing high. And then here on April 7th, we had a new intraday and closing high. New intraday and closing high on the 8th. New intraday and closing high on the 9th. And here we are on the 12th. And we're having what's called an inside day so far. The low on Friday was 40.81. And the high was 41.21. High so far today is 41.19 and a quarter, so lower than Friday's high. Today's low is higher than Friday's low. Now, if this continues, we may potentially see a new all-time historic intraday and closing high yet again today. Now, this market has been what some would call overbought for a very long time. We don't use those terms, overbought and oversold, because, well, as you can see, a market can remain quote unquote overbought for a very extended period of time. There's two indicators on this chart. In the live training room, Michael also uses the slingshot, okay, to help you with your trade setup. The slingshot was designed for that faster time frame to help give you some clarity. On the larger time frames, I focus on this green indicator, which is called the BBC. Let me refresh this chart. Green line, it's called the BBC, stands for Bull Bear Cross. Quite simple. When price is above the green line, we're bullish, looking for higher prices. And every time we get a pullback to the BBC, that gives us another opportunity to go long for the next leg, and then a retracement, long for the next leg, a retracement, long. And when price drops below the BBC, we then anticipate lower prices, which we got. Now the other indicator, it's called the CFMA1. I refer to it as simply blue and climbing, red and falling. Blue and climbing is bullish. It represents support. So when price is above the BBC and above the CFMA1, you'll see price climb the back of blue and climbing, like it's done there, like it did here, and like it's doing here. Red and falling, on the other hand, is resistance or bearish. And so in this case, we had an outside day, bearish engulfing candle, and that drove us back to the BBC. When price pulls back to the BBC, it holds more often than it doesn't. Now, even on this day, this is an extreme example, but it's a great example because we spiked the BBC. This was a huge red candle on this day, which was February 23rd. Price traded all the way down to a low 37.95. But buyers came in before the session was over, and they drove price back up to close above the BBC. So with this close above the BBC, now we're expecting higher prices, which we got until price ran into red and falling, which is resistance or bearish. That drove price back down to support. Support sent us back to resistance. Resistance sent us back to support. And then support. This time we overcome red and falling. We get back above the BBC. We put in a new all-time high. Then a retracement to the BBC. And just as we saw here, support at the BBC took us to red and falling. Over here, support at the BBC took us to the step line. Okay, that's the little black line. Step line is used primarily on the 30-minute chart to help you see the exit signal on a long or short trade. However, when price is climbing the back of blue and climbing, you'll see that the step line climbs with it. It's when the step line crosses over from the left side to the right side of blue and climbing. That represents potential resistance. And so in this case, over here, we traded through the step line, and then the next area for resistance was red and falling. Over here, we only made it to the step line resistance, which sent us back to support at the BBC, We then overcame the step line. We overcame red and falling. And that takes us to where we are now. And said just a couple minutes ago that buyers keep buying. Remember the high Friday was 41.21 half. Today it's 41.21 half. The intraday high on Friday and the intraday high today are identical for the moment. So what's this green line overhead? That is called a Fibonacci price extension. Most people are familiar with Fibonacci price retracements. When we get to spots like this in the market where we're at all-time historic highs, we would typically look left to find out where our obstacles are going to be, where we may potentially run into resistance. But when you're at all-time highs and look left, there's nothing to see. This price has never been here before. Okay? And so as we were climbing, we were looking to Friday's high as potential resistance. We haven't overcome it yet, but when we do, we've got a 38% Fibonacci price extension at 41.28. Now, the way we arrive at that is we go to the most recent significant low. We had this double bottom here, September to the end of October, and then it was the 1st of November or the 2nd of November that we began this climb, which got us above the step line, above red and falling, above the BBC. Then it's leg, retrace, leg, retrace, leg, retrace, over and over, again and again. Support, resistance, back to support, again and again, over and over. Now, by connecting this low, this high, to this retracement low, this uses the same golden ratio, the same 14th century math, Fibonacci, to project into the future where we may find potential resistance. So you can think of this as a target, you can think of it as an obstacle, but when price hits it, there will most likely be some type of reaction. Could in fact begin the retracement, takes us back to blue and climbing. This weekly trading zone you see here, that's from last week, and this is from last week. So we're going to go ahead and pull those off and clean up the chart. Now, the other important numbers that you want to be aware of, and this is why we start each trading session, whether you trade in the morning, in the afternoon, the evening, the middle of the night, go to your daily chart, identify major support, major resistance. The larger the time frame, the more important the information it conveys to you. And so we know right now we are at the first spot for resistance, Friday's high. We can get above that. Next is 41.28. After that, 42.18, 43.07. And then a 100% duplication of that leg would take us up into the stratosphere at 45.96. So we'll be watching in today's session to see, number one, can we take out? Now, let me just touch on this for a moment. The high Friday was 41.21 half. Why wasn't the high 41.2175? Because no one was willing to pay that price. You'll hear all sorts of complicated reasons and explanations as to why this was the high of the day on Friday. But the simple truth of the matter is once price reached 41.2150, in the DOM, there were people trying to sell contracts at 41.2175, 41.22. Okay, The DOM was filled with orders, but no institution, no retail trader, nobody was willing to click buy at 41.2175. There was inventory there, but nobody wanted to buy it. And that led us to close off the high of the day. We had a closing price at 41.14, which was a new all-time historic closing price for the S&P 500 E-mini futures. We opened last night and we had a slight red candle, this daily candle. Now, we don't trade off the daily chart, but we go here to get our bearings, okay? So coming into the session last night when the markets opened at 6 p.m. Eastern, right there is where they opened. We closed 41.14 Friday. We opened last night at 14.25. So don't really call that a gap, but we did open one tick higher last night. Then we closed Friday, but we had an initial red candle, but buyers came in right here, okay? Now, from this low to this high, we need to do some fib retracements. We're going to have to make some adjustments. The last time I adjusted this chart was when price was at 41.02 back on Friday. At the time, during this broadcast on Friday, and you can go back and that's why we archive all of the shows on our YouTube channel, youtube.com/CFRN, so that if you ever miss a show, you can go back after the fact and hear what we had to say. We're not the woulda, coulda, shoulda guys, okay? Everything we do, whether it's in the room where Michael's trading live in real time in front of you, or the alerts, we give you the information, the important, actionable information before it happens. Remember, anybody can look like a genius with a historic chart. You can take a historic chart and build all kinds of marvelous narratives around it. And a guy can make himself look pretty smart with a historic chart. We do things live in real time. Now, we're in week 140, I believe it is, of our Logic 247 alert service. We have over 7,000 individual alerts in the channel, and every one of them was delivered to our members before it happened, before the trigger. Okay? And that's important because so much of the stuff out there with all the clever ad copy, place where you've spent your time and your treasure trying to learn how to trade, you didn't have the full story. We do get stopped out. On average, with the alerts, 20% of the alerts do get stopped out based on not risking more than $300 per contract per trade, less when possible, based on the structure of the market and a 3-step method that we teach all of our traders. Now, in the room, Michael's teaching you the important concept that you got to have a hard stop. And to keep that part of it simple, we just use 8 ticks across every market. We use same time frame and an 8-tick hard stop on everything. As we move into larger time frames, we actually take into consideration the structure of the market at any given time. So we know where resistance is. Hasn't changed this whole time I've been talking. So on Friday, nobody would pay $41.2175. The question right now is, will they? Will they today? I don't know. If they do, then we'll have an opportunity to be long once we go to our 30-minute chart, potentially to put out an alert up to 41.28. And it looks like we just got the tick we needed. There we go. Now we have a higher high, 41.22, 2 ticks higher than Friday. So real quick, let's jump to our 30-minute chart. Okay. All right. And the next weekly trading zone overhead is 41.27/28. Okay. So we'll go to the alert channel. And this will be alert number 7103. ESM 21. Consider being long, 41.24. Initial target, 41.26. Then we have a weekly trading zone at 41.27/41.28. Okay, so let me copy that, put it in the other alert channel. Trial, folks. Okay, so that is done, and this is what it looks like. Okay, this is alert number 7103. Yes, trading the June contract. The alert says to consider being long 41.24. Initial target 41.26. The initial target is designed to give you that 2 points or equivalent thereof in other markets. That many traders, with 2 points a day in the S&P, you can earn as much money as you want to earn based on not more points, but by trading more contracts. Okay. Now, we've got an entry, an initial target. Sometimes there'll be a second target, a third target, but the final trade to target on a long is the weekly zone above. And in this case, 41.27/41.28. Now, let me give you a recap real quick of where we stand so far this week. I think this was the third quiet Sunday night in a row. For a long time, Sunday nights were just so busy. There have been Sunday nights where we had as many as 20, even 25 alerts. Now, the logic alerts are based on current price action, like you saw me just do. Okay, I used current price action to put that alert together. We are going to teach you how to do that yourself, okay, so that you won't need some guy on the internet to tell you when to get in and when to get out. So far this week, since last night at 6 p.m. Eastern, that's when the market's open, we've issued a total of 11 alerts, still waiting on the results of 4. We've had 7 actionable alerts, and 14% stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and that simple 3-step methodology we teach all of our traders. Now, this is what the alerts look like, the logic alerts, because we have 2 types of alerts. I'll show you the other one in just a second. Last week, which was week number 140, we issued a total of 45 alerts. That's a light week. And it's light because of market activity, market behavior, the fact that we're at all-time historic highs. Buyers and sellers are eyeing each other warily. Who's gonna make the commitment? Who is more committed to their position? There are institutions, there are ETFs and funds that focus on shorting the market. 45 total alerts last week, 8 never triggered, 37 actionable. 19% stopped out based on that $300 risk profile. And that brings us to this week, which is week 141. The first alert coming out of the gate last night, S&P, to be long 41.17. Initial target 41.19. Second target, third target. Now we're above last week's weekly trading zones, so that's why there's no final trade to target. The weekly trading zones are sent to our members Monday morning, 6:15 a.m. Eastern. We've published the zones since December 14th of 2009. If price really does go from support to resistance back to support all over again and again, and that is true, but if you're just starting to grab a hold of that concept and idea, think of your weekly trading zones as fixed support and resistance, because we publish them Monday morning and then they're carved in stone all week. It will not change. Okay. Now, when the zones came out this morning, the next zone we have overhead is 4127/4128. Now the zone below that this week is 4105/06. This is where the market found resistance on Friday. This is where the market found support last night. And then the market found resistance here. And that alert that was stopped out, as you can see, it was to be long 4117, 4119, 4120 to 4125. Now, important prices, important areas are almost always tested. So in this initial move last night, the swing high was 4118. Price then came back to support at the BBC. The pullback holds more often than it doesn't. So we expect it to hold. It gave us a bounce to the step line. And the step line served as good resistance. Up above, we have red and falling. That's also resistance. And so price works its way back down to support to the BBC. When price drops to the BBC, we expect that to be good support. When price drops to a weekly trading zone, we expect that to be good support. And so that good support took us initially to this resistance, which dropped us back to support, to resistance, to support, resistance, to support, to resistance, back to support. See, even though we spiked it, we closed above the BBC. So now that we've identified support again, remember, resistance to support, resistance to support, resistance, support, resistance, support, resistance, support. So what's the market looking for? It's looking for resistance. And we can come over here. We can do that just to make it clear. So the area we're looking to trade in, our window of opportunity, if you will, is this area right up here. Every alert in the channel, all 7,000 plus alerts over the last 141 weeks, are all trend trades as defined on a 30-minute chart and the BBC. Price is above the BBC, we anticipate higher prices. If price is above the BBC on the 30-minute, we're going to be looking for opportunities to buy the market. When price is below, we're looking for opportunities to be short the market. Now I said, well, let's just roll through these first, and then we'll look at the CTAs. Okay, so stop out on the S&P. Remember, over 7,000 plus alerts and 141 weeks, we know 20% on average will get stopped out. We know what the next high probability move is in all markets and all time frames using our very simple strategy. But 20% of the time, support and resistance will just show up out of nowhere for no apparent reason. Now, the logic alerts are called Logic 247 because it's based on logic. What's the next logical thing to happen? You know, in any area of life, in any endeavor, you can say, well, if this happens and then this happens, what's the next logical thing to happen? If you're holding a hammer and you drop it on your toe, what's the next logical thing to happen? You're going to scream, right? So logic and the 247 just simply means around the clock, 24/7. These are based on current price action, as you saw us just identify this window of opportunity right here. We had an alert on the Dow, which we're still waiting on. Alert on the Russell, still waiting. This was a long on the NQ, where we had an initial target, a second target, a third target. On a long trade, PR stands for potential resistance. On a short, this was crude oil, to be short 59.20, initial target 59.10. Second target, or potential support, $59. So 1, 2, third target, 58.70. And on Sunday nights, we're using the previous week zones. So the trade 2 target was 57.85/57.90. There's a short on gold, long on silver, a short on silver, a long on the S&P, and a short on the Russell, short on the S&P, still waiting, and then the one we just put out. Okay. Now again, those logic alerts, they come out around the clock. It could be 2 a.m. or 2 p.m. We have traders around the globe, so our day session is their night session and vice versa. The companion alert, which was actually the original alert service, we call those the concierge trade alerts, CTA. Now they're different because they're based on historical price action. Logic alerts are based on current price action, what's happening right now. These, historic price action, and when the two come together, that's where you'll find some of your best high probability, low risk trade opportunities. This static report is published shortly after the Globex Open each evening. So we were 25 minutes into the session when I got these published. If price starts moving up towards 41.23, that's bullish. So logic in current price action will look for opportunities to buy the market. If price starts dropping to 40.98, then logic using current price action will start looking for opportunities to sell the market on the way down to 40.98. Above 41.23, the market, we're looking only for long trades. Below 40.98, only looking for short trades. But once this report is published, the best way to deal with it is just, for the S&P as an example, you go to the chart, you draw a line in the sand here, draw a line in the sand here, monitor the logic alerts. Again, if we're trending towards 41.23, bullish, look for opportunities to buy. Price is dropping to 40.98. That's bearish. We're looking for opportunities to sell the market. So last night, if we were going to put our lines in the sand, 41.23 was the CTA last night. Now, for those of you that watch the show each day, you know that last week we had possibly a first in a decade where we had 3 days in a row, maybe even 4, but I know for sure 3 days in a row where price was so range bound, we never triggered the CTA on the long side or on the short side. So I said when logic and concierge both point, remember one's historic price action, one's current price action, when those two point at the same important price, important area, that is where you'll find your highest probability, lowest risk trade opportunities. And so the alert we just put out was 41.24. The CTA that we just put on the chart, but that we published last night, was to buy 41.23. So here you have two things coming together. Current price action, historic price action, one at 41.23, one at 41.24. Whichever trigger you choose, your trade to target is 41.27/41.28, because that is the weekly trading zone overhead. When price drops to a zone, we expect it to be good support, and it was, and it was. And when price rallies up to a weekly zone, we expect that to be good resistance. Now, you could, I suppose, just trade the alerts and be fine. But that's not our core mission. Our core mission is to teach you how to do what you just saw me do. Identify where support is, identify where resistance is, okay? And put together this. If price goes from the entry to the final trade to target, that's 3 points at $50 a point. It's $150 per contract traded. Once you earn the right to trade 2 contracts, that would be $300. Once you earn the right to trade 10 contracts, that would be $1,500. But we don't want to put the cart before the horse, because that's awkward for the cart and the horse. You start out trading in the simulator. Now, I know a lot of people have spent a lot of time in Treasure learning how to trade, so you don't consider yourself a newbie. You know a thing or two about markets. You've been around the block a time or two. Okay, that's awesome. However, you haven't learned our methodology and strategy yet. So while we do want you trading day one, following along with Michael in the live trading room, trading the alerts as they're published, we want you doing it in your demo account, in the simulator, okay? You got to learn how it all comes together. And because you have lifetime membership, it's not like the clock's ticking. You got to hurry up and get this, before you run out of time. Lifetime membership, unlimited access to everything we do, even unlimited one-on-one mentoring sessions. So, no rush here. In fact, the really important lesson that you're going to learn is patience and discipline. because we want you to put together 10 consecutive days in a row in the simulator where you reach your goal, 10 trades or less, before you go live. That's so important. Now, I know that a lot of traders, I got a lot of experience, I did this, I did that, I did this, I did that. This should be a piece of cake. Well, trading's not easy, but it can be simple. I don't know if it's a piece of cake. I think it's more like pie. But anyway, trade. Start trading. Don't be afraid to trade, but trade in your simulator, in your demo account, until you've put together 10 consecutive days in a row. Once you accomplish that, our 24/20 blueprint gives you the green light to go live with one contract. Once you go live, trading real money, you have a new goal. Before, your goal in SIM was to put together the 10 days in a row. Now that you're live, your goal is to increase your account balance by $2,000. Not by depositing more money, but by trading. Once you increase your live account with your trading by $2,000, the blueprint is going to give you the green light to add a second contract. Now, there's a huge difference between the first contract and the second contract. The second contract is being paid for, underwritten by the fruits of your labor. The money that you earned trading one contract, you didn't win it, you earned it, okay? The money that you earned trading one contract will now be used to meet the margin requirements to trade two contracts. You'll trade two contracts until the blueprint tells you it's time to add a third. You only add one at a time, and you always add with profit you earned in the market. When it's time to add number 4, number 5, number 10, number 15, Blueprint will notify you that you only add one at a time, and you only add the profit you earned in the market. Now, following that makes it so difficult to blow up an account. Not impossible. I don't want to say that trading with us, you can't blow up your account, because you can, okay? But you'll have to break a lot of rules. Because once you go live, if you ever have 2 days back to back where you do not reach your goal in 10 trades or less, you put the pause on the live account. You go back into your demo account, you book a one-on-one mentoring session, myself or Michael or Val or Bert or any of us, all of us, and we walk through your trades with you to help you understand why you don't have the available funds to add that second contract or the third or the fourth or the fifth, wherever you're at as you climb that ladder of success. Once we help you figure it out, once you understand, once you had gotten your confidence back by trading a few days in the simulator, then you go right back to where you left off. If you were trading 4 contracts and Blueprint said time to add number 5, but you didn't have profit available to add number 5, when you've gone through that process of the one-on-one mentoring and we've helped you figure it out, you got your confidence back, you step right back out where you left off at number 4. Okay? Now, CTAs are based on historic price action. I know I've said that a lot, but it's important to understand. The logic alerts are based on current, concierge based on historic. Now the number, CTA long side, 4123. I just showed you that whole list of the CTAs that went out last night at 6:25 p.m. Eastern. The CTA is a spot where the market has to make a decision. This is where we find out who's more committed, buyers, the sellers. Bulls for the bears. The CTA number will often act as an iron curtain. Price will walk right up to it and head the other direction. Like right here. Okay? Price advanced to the CTA back on Friday. Iron curtain sent it skittering in the other direction. Now, here you'll see price. We didn't trigger on the long side. We didn't trigger on the short side. We didn't trigger on the long side. We didn't trigger on the short side. Now, we had logic alerts that triggered, the ones based on current price action. But this forward guidance, CTA number, no trigger, no trigger. So that was 1, 2, 3. And on this day, we did trigger. The CTA was to be long 40.41. And then we had a weekly trading zone overhead at 40.44. So that was good for 3 points. It kept going. Now, once you understand the methodology and the strategy, in a situation like this, you could take profit at the final trade to target. There's no reason to jump out of a perfectly good trade. You'll notice here that the step line is on the left side of blue and climbing. Price itself is far to the left of blue and climbing. And so as this move starts to run out of steam, okay, what does price do? Instead of this powerful climb, it starts to walk sideways. And this little step line goes from being on the left side of blue and climbing to the right side. Once the step line crosses over to the other side on a long trade, which is what this was, when the step line crosses over, you're now looking for the first red candle that closes below the step line. And in this case, closing price of this candle was 40.68. See that on the pop-up? And so you can just barely see a little bit of red. So that candle closed below the step line after it crossed over. And so if you entered the market at 40.41 and stayed with it until the chart told you to get out, then that's a move from 41 to 68. So 41, the 27 points. It's a 27-point move at $50 a point. When price reaches resistance, there's a high, another high, clearly we've identified resistance. Resistance sent us to support, to resistance, to support, to resistance, back to support, back to resistance, back to support, back to resistance. And then on the Globex session, so during the day session, that's from this vertical line to this vertical line. This is everything that happened on April 7th. Once Globex opened, 7:30 p.m. Eastern on April 7th, price broke out of that range and made a pretty stellar move. Now, again, now on this one, it's a little bit different. The step line started out on this entire move. The step line started out on the left side of blue and climbing, and then it crossed to the right side. Okay, so that part of the equation's in place, but I've got to wait for the first red candle to close below the step line, and that happens here. Okay, so the step line, when price drops to it, think potential support. When price rises to it, think potential resistance. When price drops to the BBC, anticipate support. When price rallies up to the BBC, expect resistance. Weekly trading zone. Price travels from support to resistance and back again. These weekly trading zones that are issued Monday morning at 6:15 a.m. Eastern since December 14th of 2009, that's your fixed support and resistance for the entire week. Support, resistance to support. And then during the show on Friday, we put out this on the show to potential trading opportunity, 4105, 4110. That happened right as we went into the close. All right, so price never, the CTA never triggered. The logic 247, which is at 4124. In fact, let me just do this. CTA 4123. We'll call it L24. Logic 247. To be long, 4124. Okay. This is a powerful area. Current price action tells us to consider being long 4124. Historic price action 4123. Swing high was 22 and a quarter. So we came within 3 ticks of the trigger. Okay. Now, we're not going to write this off because it didn't trigger, because there's every good possibility that price, as it retraces here, remember when price drops to the step line, support until proven otherwise. When price drops to blue and climbing, support until proven otherwise. Drop to the BBC, support until proven otherwise. Now, there are 2 numbers for each market on the CTAs. And if you did not grab a screenshot before, here's another opportunity to do that if you'd like. Okay. Now, of course, all of our members got these last night. You, the viewing audience, just giving you an opportunity to snag them if you'd like. Okay, the short side's 40.98. And that's down here. So here we go, another day so far where we haven't triggered the long side, we haven't triggered the short side. And that all has to do Friday's high, 21.5, today's high, 22 and a quarter. Anytime you get a new high on any time frame, on any market, by a few ticks, you know, big market like this, maybe even a couple points. Be careful. Be suspicious of new highs or lows that are only a few points, a few ticks. Okay. Now, what's the next high probability thing here? Okay. Well, the first thing we're going to do is expect support here. Actually, what we have is this area. We've got the step line and blue and climbing Basically, it's an area. Okay. So first, we're going to look for support here. How will we know we found support there? Because the next candle will start printing green. Hang on for me 1 second. Okay. What if we don't find support there? Okay. Then sorry, I got it. Okay. So, I mean, if you want, you could just so we're not going to just assume that this will be support and take a shot by going along. We would never buy a red candle. Okay. We need evidence. We always require that the market prove itself to us. The market's always on a mission. Price is always trying to get to a weekly trading zone. From the minute the market's open Sunday night till they close Friday afternoon, price is either trying to get to the zone above or the zone below. Price is above the BBC. Hold on for me 1 second, guys. All right. So, do we find support here or here? There's no way of knowing. There's no indicator, no oscillator, no algorithm, no crystal ball. Because remember, God did not give man or his machines the ability to know the future with certainty. What we can know is what the next high probability move is. And the high probability move is that price is now looking for support because it found resistance. Will that support be here or here? Nobody knows. I don't care what they tell you. But let's say this candle drops to the BBC and then it starts to print a green candle. That will give us a trading opportunity back up to the swing high and then on to the weekly zone. If price is above the BBC, it's trying to get to the zone overhead. If price is below the BBC, it's trying to get to the zone below. You know which zone it's trying to get to based on whether price is above the BBC or below the BBC. Please, try not to make it any more complicated than that. There's something in our brain that makes us want to get closer to the metal. Okay? We want to put an edge on our edge. I've seen people with perfectly good edges keep tinkering with it and messing with it, and what was once a perfectly fine edge has turned into no edge at all. That's also the difficulty with having multitudes of indicators and oscillators on your chart. That leads to confusion. If you got 5 things telling you to go long and 5 things telling you to go short, you've got a mess on your hands because you don't know what to do. The very things that were supposed to clarify it have confounded you. Here, we need everything in agreement. And when everything is in agreement, we can clearly see what the next high probability move is. And so again, we've got 5 minutes left in the life of this candle. Is that enough time for it to drop to the BBC? It is. Does that mean it will? No. So this is where patience and self-discipline comes in. Now, if price got below blue and climbing, some would see an opportunity to short down to the BBC. That's a counter trend trade. Of the 7,000 plus alerts in the channel, every one of those is a trend trade. There's nothing wrong with counter trend trades. In my experience, they just don't have the same high probability, low risk nature of a trend trade. And remember, we define trend for the alerts on a 30-minute chart and where price is in relation to the BBC. Price is above the BBC, we're bullish, looking for higher prices, up to the zone. Price gets below, that's bearish, looking for lower prices, down to the zone. And when you have this, your two indicators running parallel, it's simply a market you just need to leave alone. Because there is no high probability, low risk trade opportunity here. So the market has defined resistance for us. If we're patient, it will clearly show us where support is. If we get through the stop line, if we get through blue and climbing, our highest probability trade is a bounce off the BBC, and it can be a bounce in either direction. But we need to see price pull away, pull back, and then as it starts to move higher, then we'll be long up to this swing high, and then this area up here. Okay. But it's based on market structure. And right now, we don't know what market structure is going to look like in 5 minutes. This pullback might be sufficient. If we were to, now, because I use fibs on the daily chart, people always ask me in mentoring sessions, okay, where do I draw my fibs on the 30-minute chart? I don't use fibs to put together the trade alerts. I use fibs on the daily to help me identify the areas, major areas of support and resistance. If I were going to put fibs on this chart, we would all agree this is the last leg up. Okay. So from that low to that high, the BBC is sitting down here at the 50% fib retracement. And this step line blue and climbing combo is sitting at the 38% fib retracement. Price might come down. It could spike the BBC. See how this candle spiked it? But by the time the 30 minutes was up, closed just at the BBC. From resistance to support to resistance. So now you know what the mission of the market is. It's trying to find support. Support and resistance can pop up anywhere, anytime, out of the blue, for no real apparent reason. And that does happen about 20% of the time. Because remember, over the last 141 weeks, over 7,000 plus alerts, that actually happened 20% of the time on average. Now you see this red candle? Okay. Doesn't look like support yet. We now have a new candle right at the 38% fib and balloon climbing. Oh, okay, so now we can get long. Not yet. Not quite yet. We need to get above the step line. And since I've gone to the trouble of drawing these fibs, okay, to be conservative, you might want to let price get above this 24% retracement. The alert that we have in the channel right now is to be long 41.24. Okay. We will most likely have another alert come out that will have an entry, an initial target, a second target, potential resistance, and then it will say previous alert still valid. So if price comes all the way back to the BBC and then starts printing green candles, once price gets above these two indicators, because just as when price is coming down, we expect them to be support. If we drop all the way to the BBC and start to climb, then those indicators become potential resistance. So as desperately as some of us might want to just pull the trigger right now and put on a trade and get that rush of adrenaline and serotonin and all that other stuff, happy juice, this is when you have to exercise your patience, self-discipline. Okay. So we'll come back and look at this in a minute. Let's move on to the rest of the markets. Here's the Dow. And the CTA number last night on the Dow was to be long 33,710. And as we can see, never triggered. The short side is 33,520. Never triggered. Everything between the two lines in the sand is the market trying to make up its mind. We know where support is. We know where resistance is. Support, resistance. So what's the market looking for? Support. How will we know it's found support? Because it'll start to climb. Like this. This. What if it continues to drop? Oh, we know we've got a CTA number way down here. But if we take out support, we could wait for price to get here. Yellow line means it's previous weekly zone. Or we could get short about 33,540. And by the time we get to the CTA trigger, you've already got 20 points. At $5 a point, $100 per contract traded. So no trigger on the ES, no trigger on the Dow. This is many days in a row that we're seeing this. That's because we have a market at the top. Now, one thing I didn't show you on the daily chart, since we're on the subject of fibs, because we have a new historic intraday high, we got to take our fibs and we got to embrace the new high. And the fibs on our last leg up, we have to do the same thing. Okay. Now, from this low on the daily which happened on March 25th. Today's new intraday all-time high. There's 24% fib, 38, 50, 62. However, remember that big picture I showed you where the low was the end of October up to today's new high? Here's the 24% fib of the entire move. That's way down here at 39.10, we'll call it. Now, an area that's of real interest to me is this area here. I know you've heard before that what was once resistance becomes support, and vice versa. That's true. It happens all the time. This area I find extremely interesting because we spent 1, 2, 3, 4 sessions trying to get through, couldn't do it, went looking for support, found it. Rally back up, and it's been 1, 2, 3, 4 days trying to get through. Finally, on the 5th session, we were able to take out those highs. So that was some pretty good resistance. Important prices, important areas are almost always tested. So I consider it an extremely high probability that this retracement, if this turns out to be the high, okay, if we put in higher highs, then we'll have to adjust that line up again to embrace the higher high. The 62% fib right now lines up with this area. This is a very, very important area. In fact, let's see if, yeah, there we go. Now, in order for that to happen, of course, we've got to overcome this support, this support, support, and this is the big one. On the daily chart, when price drops to the BBC on the daily chart, that's usually good for a whale of amounts. Look here. Drop to the BBC. Takes us to where we are now. We now have a doji on the day, but it's not an inside day because we put in a slightly higher high of exactly 3 ticks. Okay. So this number is very important. Call it 39.10. And from where we sit now, 40.93, where we just so happen last week we had a zone at 85. This week that zone's at 40.93/94. So everything you're looking at here, that's the zone overhead, the zone below, and then the zone below that. So price on the 30-minute chart has traded through support. Get these fibs out of the way, make it clear. We knew that could be potential support, but it wasn't. There was no actionable event there. Okay. Now, as we approach the BBC, does it hold? Does it consolidate? Does it spike it? Or is it the beginning? Because we got a daily double top here. Could that be the high for a while? It could. But we're going to trade what's in front of us, which is what we do each and every day. Here's price dropping down to this support area, and then there's a window of opportunity down to the CTA, Now zones on this chart. We've got a zone at 33,750. Current weekly zone 33,750/55. Remember, this is your fixed support and resistance. This won't change for the entire week. This is a previous weekly zone, so we're going to go ahead and let that go. Next is 33,565. $33,565. What did price do? It's Friday's high. It dropped to the, remember, price is always trying to get to a zone. Made it to the zone below. Tried to get to the zone overhead. Buyers were not committed enough. Now we're back below the BVC. Now we're heading down to the weekly zone, 565/570. If price can get through that zone, then the next zone below for this week is 33,420. So I'll move the last week's zone right into position at 33,420. And then below that is 33,255. Okay. Do we have anything tradable here? No. We haven't triggered the CTA above or below. We're coming into support. If this turns out to be support, then we're going to have resistance right overhead. BVC, step line, doing climbing. These sideways markets, when you're a trader, you want to trade. You're a fisherman, you want to fish. Part of trading is being able to control your emotions and to be disciplined enough to not put on a trade in the absence of opportunity. There's no opportunity here. Yes, going short makes a lot of sense, but not right into support. That'd be like getting in your car in the garage, cranking it up, and instead of putting it in reverse, putting it in drive. That won't end well. And that could be exactly what happens here. Because we have to expect this to be support until proven otherwise. One, because it's a zone. Two, because it's the low of the session. So we need to overcome the obstacles, and that leads us to the opportunity. Now, if we trigger this CTA here, here's an opportunity to have some points where you hit the CTA. But once the CTA is hit, we don't have any real support, potential support, until the low of this candle right here. So that'd be a very nice trade opportunity. But we don't know what's going to happen next. If we find support, we've got resistance immediately overhead, and then here, and then here, and then here. Our window of opportunity is way up here. So we have opportunity here. This opportunity here. Be careful, because price can spike a zone, and then big window of opportunity here. This will probably become an official alert in the channel. All right. Here we go. S&P at the BBC. 15 minutes left in the life of this candle. Got to be patient, see what happens. Okay. Russell. Okay, these are last week's zones that you're seeing. However, this zone from last week, 2240, has been important this session. Previous weekly zones will tend to hold sway over the market. Sunday night, Monday, Tuesday. Okay, so now this week's zone above that is at 2250. And then 2239. So we can actually, let's get rid of last week's zone because we have this week's zone at 2239. And below 2239, we got 2227. And below that, we got 2208. This is where the market opened last night. CTA was 2257 on the long side. We obviously haven't hit. And then on the short side, 2233. When triggered, important prices, important areas are almost always tested. 2233. Okay. So from 2233, we drop to the zone at 27. That's 5 points at $50 a point. It's $250 per contract traded. Once the market found support, goes and looks for resistance. So went from the zone, down to the zone, back up to the zone. This was the opening candle on Wall Street. Typically, that 30-minute candle will be the largest candle of each session. Not always, but most days. So we spiked the weekly zone. Buyers came in, took us back up to resistance. Now we're back below the trigger. Now, over here, when we trigger short on the CTA, we've got red and falling. That's what we want. Okay? We're below the BBC. We only short below the BBC, and we want red and falling. Then we trigger again, but this one's a difficult one. Number one, I don't do anything during the first 30 minutes of Wall Street. I'll trade in the morning, the afternoon, the evening, the middle of the night. I just don't trade the first 30 minutes of Wall Street because it's too volatile. Okay? The market is seeking its direction for the morning. Now, that's just a personal preference. Michael hits the ground running. Valerie hits the ground running. Most of our traders hit the ground running as soon as Wall Street opens. My personal preference, I wait at least 30 minutes, let whatever news there might be that day, whatever economic report at 10 a.m. come out, and then swing into action. So conditions are perfect for this short. But over here, you've got the BBC right at the trigger. Now, but the trigger's just below. Okay? So would this qualify? Well, red and falling, I'm going to go ahead and say yes. But not all triggers are created equal. Because right here, we have another trigger, resistance to the trigger, but we've got blue and climbing. Remember, we want red and falling, red and falling. So again, this is you going to the garage, getting in the car, putting it in drive instead of reverse, and you hit this wall. Can it overcome it? Can. Will it? I don't know. So why take chances? I'll just resist. Now, would it be acceptable to trade 22.29 down to 22.20? Well, the zone's actually 27/28. So there's just not enough room to run. Because right now, we have to expect that to be support until proven otherwise. Okay. So we have one good trigger, two good triggers, not a good trigger. All right, next is the NQ. And on the NQ, we're sitting at about 13,800. So we got a weekly zone at 13,875. Below that, 13,767. Price drops to the zone, catches a bounce, runs into resistance. From Friday's high, we can just track that resistance right across there. Resistance to support, back to resistance, back to support, back to resistance. Now the market's looking for support. Will it find it here? If so, we'll have an opportunity to trade to the upside. I'd like to get above all of this. So I will want price to get up into this area before I put an official alert in the channel. And on the short side, there's just not enough room to run. To trade the Russell or the NQ short, I would need to see price get down here. Now, bullish cross. This is a bearish cross. This is a bullish cross. A bearish cross is when red and falling crosses below the BBC. Bullish cross is when blue and climbing crosses above the BBC. A bearish cross that leads to an extended move, when price revisits that area, it will most often act as resistance. These are 30-minute candles. So for 1, 2, 3.5 hours, it was good resistance until we finally broke free. Now, if sellers are able to take us below the zone and below this swing low, then we would be interested, and I would put an alert out down in this area. Maybe more something like that, honestly. But now when we drop to the zone, we expect it to be good support. We did spike it real good, but why was 13,732 the low? Well, you know the one reason that I gave you earlier because nobody took action at that price. But there's also this bullish cross, a bullish cross that leads to an extended move. When price revisits that area, it will most likely be support. Just like on the bearish cross. When price revisited that area, there's resistance for 1, 2, 3, 4, 5, 6, 7 30-minute candles. So we got a CTA on the NQ at 13,850. It's right here. Hasn't been triggered. 13,850. Which means this window of opportunity is going to have to be more like that. Now, an entry at, call it 55. From 855 to 875, that's 20 points. At $20 a point, that's $400 per contract traded. CTA on the short side is 13,720. Hasn't triggered. Now, to anyone that's new, if you go to the YouTube channel, go back a week, a month, a year, 2 years. Fast forward through a couple of the shows, you'll see how rare it is to have so many markets, so many days in a row that don't trigger the CTA. Looks like we're building the top, but only time will tell. The question now is, do we find support here and have a tradable leg back up to resistance? Or the other scenario, one of the two will happen. In fact, by the time you and I talk tomorrow at this time, we will have probably filled this window of opportunity or this window of opportunity. Now, in the room, the new traders have a goal typically of 2 points a day or $100 per contract per trade. Remember, this window here, that's a $400 per contract trade. Once you've earned the right to trade 10 contracts, that'd be a $4,000 trade. But the worst thing you could do is, man, this is so simple, so easy. Bite your tongue. There's no easy in trading. Simple, yes. Easy, no. But once you've put in the time and earned the right to go live and earned the right to trade 2 contracts, and that's an $800 move. If you earned the right to trade 3 contracts, that's a $1,200 move. But you will never get there by just diving in and trading live. I know I seem overly cautious, but I talk to so many traders every day, and I hear war story after war story about all the gurus and the rooms and the indicators and the oscillators and all the time and all the treasure that's gone up in smoke. And, if a methodology and a strategy legitimately gave you the ability to be consistently profitable, could you even put a price on it? Would it be worth 50 grand, 100 grand, 200 grand? Only you can answer that question. The problem is all the people that I talk to have spent all that time and all that treasure, still don't actually know how to trade. They know a lot about the markets. They can tell me what a stochastic does and what the math is behind it. Stochastics, MACDs, RSIs, man, they know this stuff backwards and forwards, up and down. But they still don't know how to trade. This is, I think, where we differ from many places, is that we do actually teach you how to trade. Now, I can teach how to play baseball too, but I can't promise you that you're going to pitch for the Yankees. Michael and I and Valerie and Bert, all of us together, we can teach you how to trade, but we can't promise you that you're going to be the next big trader that they write a book about or make a movie. We give you the information, we give you the tools, but you have to bring to the table the most important ingredients: patience and self-discipline. All right, we're almost done here. We've done the S&P, the Dow, the Russell, the NQ. Okay, now we got some green going. Okay. If we take out that high, if we take out, get above the step line, and even just this little slice right here, 814 to 824, that's $200 per contract trading. And if there's a momentum move that takes you above this resistance, that would carry you right into the CTA, which will either be an iron curtain or it'll swing wide the gate, get you up to the weekly zone. It's a process. Welcome to the process. We don't weigh you down with a whole bunch of information and stuff that's not going to help you. We try to break everything down to the single lowest common denominator. All right, let's go to crude oil and get this thing wrapped up. Crude oil. Okay, that's a last week zone, 60-60. In fact, the highest weekly zone for this week is 61.40. It's a previous zone. Previous zone. So 61.40. The zone below is 60.35. The zone below is 59.70. And what do we got coming together here? Red and falling, EBC, step line, trading zone. Yeah, the price came right down and touched that previous weekly zone. Could we go short here? Yeah, but 59.58. You don't have an here. We just simplify it. Bullish cross. Support. That support needs to be broken. We need to get below that bullish cross. Then we could short the market. Down here. Possibly. All the way to here. The next zone below 59.70 is 59.45. Which was a previous weekly zone. I'll leave it like that because it was a previous zone and a this week's zone. 59.45. Below that, it's $59. Which also, let's get rid of that. 59. Okay, the CTA number was 6010. Okay. Here's where the market opened last night. So the CTA on the long side was 6010. $80. Finally get a move that takes us to the zone overhead. And then, so we get one trigger, we get a couple small triggers. This one takes us to 23, so $130. Then we get the big move. And then the CTA on the short side is 59 and a quarter, which we haven't hit yet. This, that. That's our window of opportunity on the downside because we have potential support here, here, here. CTA could be an iron curtain or it could swing wide the gate. We don't know. Gotta let price get there. Patience, self-discipline. Go to gold. CTA on gold last night, 1751, never touched. Short side, 1741, touched. Okay, so from 1741, we make it down to last week's zone. Then we get back above the trigger. Now here we got red and falling. We're below the VBC. From this trigger, we're above the VBC, and we don't short above the VBC, so that's not a valid trigger. It's not one you would take. Over here, you would have to wait for price to get below the VBC, and then there's the trade. One last market, silver. Okay. CTA for silver last night, long above 25.39, never happened. Short below 25.19. That one did happen. 25.19, we dropped to 25.10. Twice. 3 times. So that's 2 pennies is $100. So we had $450, $450, $450 per contract traded. And then we dropped from 25.19 $24.73. 2 pennies. $100 per contract. There you have it. Around the world. Time now. Oh, if you have not yet become a passport holder, you can continue to be these guys, or maybe you want to become this guy. We've made it very simple. We've made it very affordable. We give you around the clock, 24/7, 365 support. We give you live training with a live instructor, interactive. You can ask questions 2 hours a day, every day, Monday through Friday, every trading day. But in our Telegram discussion group, there's always somebody there to help you and answer your questions. So if you're sick and tired of being sick and tired, you're sick and tired of wasting money on nonsense that doesn't help you learn how to trade, then the passport might be what you need. eminifuturestrading.com. Visit there, get signed up, and call Valerie. Let her know you just signed up. She'll send you everything you need to get started. All the invitations, all the links, indicators, charts, you name it. she'll take good care of you. You can call her anytime at 949-42 Emini or send an email to support@cfrn.net. Our good word for the day, responding with grace. 2 Peter 3:18. How do we overcome hurts, past hurts in relationships? How do two people combine separate and unique perspectives to create a satisfying and loving relationship? There's a very special ingredient called grace that must be added to the mix. It calls for extending to the other person the same grace that God extends to you. It bandages broken people and permits the defeated to develop winning ways to escape their past. It gives strength to those who struggle to be functional in areas where historically they've been dysfunctional. Grace restores the heart and resolves the troubles of a tormented spirit. It uplifts through loving kindness and forgiveness. It calls in the favor of God. And as He bestows it on us, we should extend it to those who need our compassion and love. We're all broken in some area, and we need to learn to accept and that to help mend the brokenness in others. Peter did not believe he was capable of denying his Lord. In fact, he swore he would never do it. But Jesus not only predicted it, He promised to pray for him until he was fully restored. You can read that in Luke 22:32. And we are called to do that as well, to extend to other imperfect people, just like us, the same love and grace that has been shown to us. In 2 Thessalonians 1:3, Paul wrote to the Thessalonians, "We are bound to thank God always for you, brethren, as it is fitting, because your faith grows exceedingly, and the love of every one of you all abounds towards each other." And then Peter adds, "You must grow in grace." It's a process. Welcome to the process. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.